Hiya and welcome to Working Dad Trader. This is the channel where I try and inspire working class parents like myself to think about their financial futures, their children's financial futures, and to just show that it is possible to invest in the stock market and be successful and build a better life. If you're also interested in just stocks and the stock market, this is also the channel for you. Or if you're just nosy and want to know what's going on and want to have a look at my portfolio, that's okay too. You can still look through the keyhole and watch. In this episode, we're going to be going through my trading 212 portfolio to see what's happened over the last month. This is the one for July. This is what happens. I try and do one every month with just a small amount of money. I've got my own personal ISA, but this is just a normal trading 212 account that I use just to buy stocks and see how successful I can be, and just to show that you don't need thousands and thousands of pounds to have a go in the stock market. So today's date is the 27th of July, and this is the state of play of my trading 212 portfolio. We're currently sat at 10.55%. It has been a lot higher. It's been 12.6% only sort of a few days ago, but again, constant sort of bad negative news come from China is dragging my portfolio down. I have 31 stocks in my portfolio at the moment, and the top three being Facebook, Alibaba and Games Workshop. As you can see, Alibaba holds quite a big portion of my portfolio. With Alibaba, it does seem to be one step forward, two steps back, and that seems to be with all of the Chinese stocks. As you know, that I'm heavily invested quite in the Chinese market, and I've done previous videos about it before. I think long term it's going to be great. It just seems to be at the moment we're just constantly going through different battles. The latest being that they've just hit Tencent with rights to their music. They've made them release that, so that's caused a bit of a shock in the market again, and plus there's the current trade war with the US going on and tensions are high. All of these sort of negative factors at the moment are just spooking people within the Chinese markets, and people are selling, and that's why we're seeing quite a big sell-off. So as you can see, my Alibaba position is about 18% plus down, nearly 19% down. It is, as the months go on, we're still wondering. I was confident that by the end of this year that we will see a strong end, and at some point hopefully this negative and bad news will end, and soon it will bottom out and we shall start climbing again, because fundamentally it's a really great company with a lot of the Chinese stocks are big stocks like JD.com, etc. Alibaba, they're really powerful companies. I think once all this dust settles, then hopefully then we shall see an uplift. It is a risky play, like I say, and it is what's dragging my portfolio down at the moment. But I'm still happy. I'm going to hold Alibaba not just for the year, I'm going to hold Alibaba into the future as well. So at some point, even if it goes into 2022, it will recover and it will go up again, and that's when I shall see some great profits. As you know, the last month I've also been buying little bits more of Alibaba during the month to add to my position, why it's going down so low. So like I say, it's a really long-term play. It is risky, and I don't obviously recommend it to anyone. It's do your own research, but that is my play on Alibaba. So as we move on to the stocks that have left my portfolio this month, they would be Tilray, Walt Disney and AT&T. Tilray, I hold my hand up, was a mistake. I bought the stock hoping to see an uplift. Then the sort of Reddit gang got involved and messed around a bit slightly, and it was just at the moment I don't think that stock's going to go anywhere. That was only meant to be for a short-term hold, and it was a mistake on my behalf, so I got that one wrong. So I quickly realised my mistake and sold that one on. With Walt Disney, I assessed that again, as you should do every so often. You should look at the companies you're holding. and I got fantastic profits and a good uplift to start with, especially last year on Walt Disney. It's not done a great deal this year. Walt Disney, it's sort of leveled off or slightly gone down. I felt personally that I had maximised the initial surge for Walt Disney, so I decided to sell out and take a profit on that one. AT&T, I think with a lot of negative, when you reassess a company, you look at what's changed. Obviously they've cut their dividend, which was one of the main reasons people buy AT&T, for their fantastic dividend. But that now has been cut. It's been cut in half pretty much. So that's a negative. I think this HBO merger stuff again is also a negative. I don't think that's going to play out great for the company. The stock's been on a decline for quite a few years now. When you look at the charts, it's pretty low at its current price today. It just seems to keep going down and down. They seem to think these different moves are going to improve the company. I'm not so sure. I've also getting information from my friend Mark, who's telling me that customer service is rubbish. Obviously in the UK I don't deal with AT&T, but he's been a customer and says that the service is poor and the quality is getting not great. So there's a lot of negative stuff coming from AT&T, and the more I looked into it and the financials, it really did not make any sense or tick any of the boxes that I require. Okay, so as far as buying stocks in, I've just been nibbling bits more of my stock in Alibaba, like I said, and I've just bought a few more bits of Facebook, because there was a short period with that dip. I took advantage of that dip and bought a bit more of Facebook. So the only new stock, which is just one stock that came in, which was a company called Pembina Pipeline. I hope I pronounced that right. It's a sort of oil and gas company that owns a lot of network of pipelines and infrastructure, and it transports gas, natural gas and oil all around North America. It's a Canadian-based company, and it comes out of Canada, and it's heavily involved in gas and oil. So that's the only new addition. The reason I bought into that company was just because I need to get a few more stocks with fairly decent dividend payment stocks in. And it's a really good dividend stock, paying over 6% yield. So I wanted to bring that in. I thought that'd be quite a good company to bring in, just to give my portfolio a bit more balance and just to up the sort of dividend stocks as well. Okay, so thank you much for watching. Remember to, if you like this sort of content, to hit the like button and subscribe, and hope to see you in my next video. Okay, take care.